Hello everyone, this is Gracie here. In this video, we will be discussing on calculation of unsold stock with normal loss in Gordon and abnormal loss in transit. So in the previous problem, what we discussed in the previous videos where we add no normal loss with the first video, then we add where we add normal loss in transit. We discussed problems on normal loss in Gordon. So now normal loss in Gordon and abnormal loss in transit. So when it is in transit, it will be the loss which is bared by the consignor. So it will be before the cost of goods received by consignee when the normal loss is in transit. But now when the normal loss is in go down, it will be accounted or it will be taken into consideration after the goods was received by the consignee. Why? Because normal loss is in go down. So where is the goods stored? In the go down. Whose place is it? Consignee's place. So it will be accounted after cost of goods consigned received by consignee. Next, abnormal loss in transit. In transit, in the sense the goods are moved from consignor's place to consignee. So it is still moving. So when it is in moving, it is still not received. The goods are still not received by the consignee. So as it is as it will be accounted before the goods are sent or received by the consignee. So it will be accounted before the cost of goods which is received by consignee. So we will check here how to account it. So now Mr. Surender consigned 20,000 units at rupees 10 per unit to Dharani and incurred delivery expenses of rupees 7,000. 1,000 units were destroyed in transit due to theft. So due to theft, 1,000 units were lost in transit. So next, 13,000 units were sold, 2,000 units normally destroyed in Gordon. Dharani incurred non-recurring expenses of 900. So Surender is the consignor. Dharani is the consignee. So Surender is sending how many units? 20,000 units at rupees 10 per unit to consignee. Whose consignee? Dharani. And incurred delivery expenses of rupees 7,000. Then who's incurring delivery expenses? Surender is incurring delivery expenses. So delivery expense is nothing but the expenses which is meant for sending the goods from the to deliver it to the consignee's place. So it is non-recurring expenses by the consignor. So it is 7,000 you will be adding with the goods sent on consignment. Then 1,000 units were destroyed in transit due to theft. So any loss which is incurred by the carelessness of the carelessness of the owner will be called as abnormal loss. So theft is something, if you are careless only then it will incur. If you are very alert when transiting the goods, when the goods are moving from one place to the other, then there is no loss incurred. So this is incurred by how? By carelessness. So as it is incurred by carelessness, it is called as abnormal loss. So when is this abnormal loss of 1,000 incurred? In transit. So where will you record? Before cost of goods received by consignee, you will record this. Next, 13,000 units were sold. So this units will be useful for us to calculate what is the goods which is unsold. So that is what they have asked to calculate for calculating unsold stock. Okay, so next is 2,000 units normally destroyed in Godon. So how many units are destroyed? 2,000 units are destroyed in Godon. So these are normally destroyed. So it is a normal loss which is incurred. So where it is incurred? In the Godon of whom? In the consignee's Godon. So as it is incurred in the consignee's Godon, we will record it after the goods is received by the consignee. After that we will deduct it. So I hope you understood. Then Dharani incurred non-recurring expense of 900. So they clearly mentioned non-recurring expenses incurred by Dharani of rupees 900. So now they have asked us to calculate the value of unsold stock. So let us get into the calculation. Calculation of value of unsold stock. So now you have goods sent on consignment at rupees 10 per unit. How many units? 20,000 units at rupees 10 per unit to Dharani. So 10 into 20,000 will give you 2 lakh. So that is what is recorded here, 2 lakh. Then delivery expenses of the consignor is 7,000. So you will add non-recurring expenses of consignor 7,000. So 2 lakh plus 7,000 will give you 2 lakh 7,000. So what is the total quantity? 20,000. So next you will minus what? Normal loss in transit. Do you have normal loss in transit? No. You have normal loss in Godon. So normal loss in Godon will come after the goods is received by consignee. So normal loss in transit is nil. Next, do you have abnormal loss in transit? Yes, abnormal loss in transit is there, which is 1000 units. So normal loss is nil. Next, you should see whether you have abnormal loss. So now you will minus abnormal loss in transit. So what is the, you know the units, 1000 units are lost, but you don't know what is the cost. So what you will do, you will cross multiply. That is, so you have normal after deducting normal loss, so you don't have any normal loss, so the quantity balance is 20,000 and the total cost is 2,07,000. So now for 20,000 units, that is quantity units, the amount is 2,07,000. Then abnormal loss in transit is 1000. What will be the number of units for it? So you will cross multiply. So 1000 into 2, it is 1000 into 2,07,000 divided by 20,000 will give you 10,350. So it is just a cross multiplication. So 1000 into 2,07,000 divided by 20,000, you will be getting for 1000 units what is the cost. So which is where when you cross multiply, you will be getting 10,350, which you have recorded here. Next, after deducting the abnormal loss, so the balance will be the cost of goods which you're sending it to the consignee. So cost of goods which is received by the consignee is from 2000 units, 1000 rupees, 1000 units is the abnormal loss. So when you minus, you'll be getting 19,000. Then after out of 2,07,000, 10,000 is the value of abnormal loss. 10,350 is the value of abnormal loss. So you'll be getting 1,96,650. So this is the cost. So this is the cost at which the goods are received by consignee. So after this, you should add non-recurring of expenses of whom? Consignee. Because the goods are received by the consignee, isn't it? After the consignee receives it, whatever expenses he is meeting, that is non-recurring expenses, should be added. So now let us add the non-recurring expenses of consignee. So what are the non-recurring expenses of consignee here? It is mentioned as Dharani incurred non-recurring expenses of rupees 900. So out of 1,96,650 which is received by consignee, you will add 900, which will give you the total value of 1,97,550 and the quantity is 19,000. So with this balance, you will minus what? Less normal loss in go down. So less, do you have normal loss in go down? Yes, you have 2000 units normally destroyed in go down. So normal loss in go down is 2000 units. So as I've already discussed, any normal loss will only reduce the number of units, but not, it will not disturb the total cost. So the total cost in the area will be nil, only the number of units will reduce. So when it is reduced by 2000 from 19,000, you'll be getting 17,000 units. The cost will remain same, which is 1,97,550. So after this, you will minus abnormal loss in go down. In the problem, you don't have abnormal loss in go down. Instead, you have abnormal loss in transit, which you have already accounted here because that is in transit. So it is the responsibility of the consignors. It will include in the consignors cost. So it will reduce the actual, the consignors, as it is in transit, it's still moving. So it is the responsible of the consignor to account it. So that is why it is not appearing here. Only when there is abnormal loss in Gordon will be applicable to the consignee. So when you have abnormal loss in Gordon, you will be considering here. So here you don't have abnormal loss in Gordon, so it is nil. So the total what you get is 17,000 quantity and 1,97,550 is the amount. So with this, you add the sales. 13,000 units were sold. So out of the total units what you have in the business is 17,000 after deducting all your normal loss and abnormal loss units. So in 17,000 you're selling how many units? Only 13,000 units. So as you're selling only 13,000 units, so what will be the unsold stock? 17,000 minus 13,000 will give you 4,000. So 4,000 is your unsold stock. So now you will find out what is the value of unsold stock, because they've asked us to calculate value of unsold stock, which means for 17,000 what is the cost? The goods which is available for sale is how much? 17,000 units. For 17,000 we know what is the cost, 1,97,550. Then for the unsold stock 4,000, what will be the cost? So cross multiply 4,000 into 1,97,550 divided by 17,000. You will be getting 46,482. So this is how you will calculate the value of unsold stock. So now this is done with the problem. So the next problem what we are going to discuss is illustration 18, problem on valuation of closing stock with abnormal loss in transit. Now goods sent on consignment 1000 kg at rupees 10 per kg. Expenses paid by the consignor, freight rupees 500 and insurance rupees 300. 200 kgs were destroyed in transit due to accident. Claim admitted by the insurance company was for rupees 1500. The consignee sold 700 kgs at rupees 20 per kg and incurred the following expenses: unloading 200, go down rent 500, selling expenses 300, pass entries relating to loss in transit and unsold consignment in the books of consignor. So here they have asked us to calculate and then pass the journal entry. So now if you look into the question, goods sent on consignment, how many goods? 1000 kg at rupees 10 per kg. So 1000 into 10 will give us how much? 1000 into 10 will give us 10,000, which is the goods which is sent on consignment. Then we need to check, do we have any non-recurring expenses? Yes. So we have expenses paid by the consignor, freight 500, insurance 300. So both are non-recurring. So we will add freight and insurance 500, 300. The total is 800. So this is cost of goods in. So when we total up goods sent on consignment plus non-recurring expenses, we should get cost of goods in transit. So the goods which are moving from the consignor's place to consignee. So these goods are moving. It is in transit. So transit in the sense it is moving in the vehicle to be reached to the consignee. So how many goods? 1000 units. And what is the cost? 10,800. So next in the problem we will check, do we have normal loss in transit? No. So we have 200 kg were destroyed in transit due to accident. So due to an accident it is destroyed. So accident also occurs when you are careless. So when any expenses which is incurred when you are careless, due to your carelessness, is called as your abnormal loss. So 200 kgs is nothing but your abnormal loss. So we will get here as it is in transit less abnormal loss in transit. So we know for 10,000 units what is the cost? 10,800. So what is the abnormal loss units? 200 units. So for the 200, what is the cost? We're going to cross multiply and find out. For 1000, if it is 10,800. For 200, how much is it? Is a question mark. So cross multiply and you will find out the value is 2,160. So it is 200 into 10,800 divided by 1000 will give you 2,160. So when you add up your 1000 plus 200, it will give you the goods which is received by the consignee. I'm sorry, when you minus up 1000 minus 200, because it is a abnormal loss. So these units are going out of the business. So it's not going to be in the business. It is a loss which is incurred. So when you minus 200 of abnormal loss, the balance is 800. And with 10,800, the total cost, abnormal loss will reduce the total cost as well. But when we add normal loss, it will not affect the cost. Only the units will reduce. As here it is abnormal loss, we are reducing the units as well as the cost. So when we reduce the cost of abnormal loss with 10,800, we will be getting 8,640. So 8,640 is the total cost for us. So next, after goods received by consignee, we have 800 and 8,640. So with this you will add non-recurring expenses of consignee. So when you are adding, do you have non-recurring expenses of consignee? When we get into the question, if you check, you have here the consignee sold 700 kg at rupees 20 and incurred following expenses. What are the expenses? Unloading. Unloading is non-recurring. but go down rent and selling are recurring. So you will not take into consideration go down rent and selling expenses. You will only take non-unloading expenses. So with the goods received by consignee, you will add up non-recurring expenses of consignee, unloading expenses, which is 200. So 8640 plus 200 will give you 8840, and the total quantity is 800. So this is the expenses which is incurred by the consignee. Next is you will calculate and find out 800 and 8840 is the goods which is available for sale. Now check what is the saleable units. So here the consignee is sold 700 kg at rupees 20 per kg. So he sold how many units? 700 units. So what is the available units for sale? 800 minus 700 what he is sold. So that will give you the value of unsold stock, which is 100. So 800 minus 700, 100. So you will find out for unsold units or stock what is the value. For 800 units, if it is 8840, then for 100 units what is the cost, you're going to find out. So you will cross multiply 100 into 8840 divided by 800 will give you 1105 is your unsold stock value. So which is 1105. So with this, in the problem they have also given insurance company is giving us the insurance claim of 1500. They have asked us to also calculate what is the abnormal loss. When they give you anything that claim you're receiving against abnormal loss, that calculation also you will be showing. So what you're going to show is value of abnormal goods when insured. So what is the total abnormal loss in transit? What you have got? 2160 is the total loss. So the amount what is lost is 2160. But in the question, what is the insurance amount you are receiving? 1500 is the insurance amount what you are receiving from the insurance company. So out of 2160, the total normal loss in transit less the claim amount what you are receiving from insurance company is 1500. When you minus what is the actual expenses that the consignee is bearing? 660. So insurance claim has reduced the total loss which is incurred. So 660 is the loss which you will be transferring it to the profit and loss account. So note, go down rent and selling expense of consignee are recurring expenses. Therefore, they are not considered for the calculation of closing stock. And in the question, they have also asked us to pass journal entry. So in the books of consignor, so they have asked us to pass the journal entries in the books of consignor. So that is how will you treat the loss in transit based on that past necessary journal entries. So what is the loss which is in transit? That is abnormal loss. So abnormal loss is a loss which is incurred. So loss will always be debited. So abnormal loss account debtor to consignment account. Why is consignment account crediting? Whenever there is a loss, the total number of units in the consignment will reduce. So abnormal loss is a loss, so it is debited to consignment. From consignment it is going out, so consignment balance will be reducing. So it is to consignment. So being goods lost in transit. So how much is this? How much is it? 2160. Next. So after the loss is being bared, then you're getting the insurance amount. So when you get the insurance amount, what is the loss now? The loss will reduce, isn't it? So it will be who's giving the benefit? Insurance company account. From insurance company we are receiving how much? 1500. That is why we are debiting. Then what is happening? 1500 you are receiving from the insurance company. So then 660 is the loss what is incurred. Loss will have the debit balance, so that is why profit and loss account is debited 660. So what is the total loss which is incurred towards consignment? It is 2160. So you will account from insurance company what you are receiving, then how much are you transferring to the profit and loss, and what is the total consignment loss which is incurred under abnormal loss you will showcase here. So being value of abnormal loss recovered. Next, as you have recovered the abnormal loss, the last entry is you will show up what is the total cost of your closing stock. So consignment stock account is nothing but the stock which is remaining in the account. So consignment stock account debtor the consignment stock which is still remaining in the business, isn't it? As it is still there in the business, you will show it in debit side. So debit consignment stock account 1105. So how did you get 1105? 1105 is the value of the closing stock which is mentioned here. So you will pass journal entry consignment stock account 1105 to consignment account 1105. Consignment to is credited here because everything is occurred in the consignment transactions. So that is why consignment is credited, and all your expense, others are all your expenses and assets and losses which you will have a debit balance. So the last one is, as we have put here, consignment stock account to consignment account being the cost of closing stock accounted. So this is the journal entry what you're supposed to pass. In the next video we will be discussing how to calculate value of unsold stock along with the journal entries to prepare ledger entries on consignment and other ledger accounts. So I hope you understood this problem. Thank you everyone.